Will investing in the Bajaj Allianz Life Flexi Income Goal Plan help you achieve your income needs and fulfill your life's financial goals? Let us find out the answer to this question through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. This is a non-linked participating guaranteed income life insurance plan, and some of the key features of the policy is if you have any cash bonus, it can start from the first month onwards, and you have the option to accumulate your survival benefit and earn an investment return. There is also a joint life cover option available, and 100% of your sum assured as guaranteed monthly income GMI from the end of the PPT, which is the premium payment term, till maturity is available. And at maturity, you can get 50% of your sum assured as a maturity booster. These are some of the key features, and there are benefits like maturity benefit, which the policyholder will get once the policy matures, and there is death benefit, which the policyholder's nominee or legal heir will get if the policyholder unfortunately passes away during the policy term. And there are also survival benefits, which is of three kinds. One is cash bonus, another is in the form of guaranteed monthly income, and another is in the form of cash value. So if you want to know more about the aspects of these plans in detail, you can refer to the policy brochure. Now let's take a look at the advantages. So you have the option to receive or accumulate your cash bonus or guaranteed maturity benefit. Through accumulation, you can enjoy the power of compounding. And in case of the policyholder's death under the joint life cover, along with the waiver of the premium option, the spouse also receives a lump sum or guaranteed regular income. And you have the option to take up a policy loan, which can be subjected to a maximum limit of 80% of your surrender benefit. And you can enjoy extra coverage during the policy term by choosing the optional additional rider benefits at a nominal extra cost. And there is high sum assured rebate, which is HSAR, available on the annual premium. And there is a tax benefit available as per the Section 80C and Section 1010D of the Income Tax Act. So these are the advantages. The disadvantages are the lock-in period of this policy is for 2 years for surrendering or for availing the loan option, and the cash bonus which you may receive immediately may not help you to meet any big ticket expenses, and maturity benefit is a non-guaranteed amount, so you can't earmark for any of your life's financial goals. And in case you have chosen the accumulation option in cash bonus or guaranteed monthly income, then the investment return gained on ACB and AGMI will be declared by the company each year. So these are some of the drawbacks that you need to keep in your mind before deciding to invest in this policy. Now, as we have a basic understanding of this policy, so let's move on to the analysis part of the video, where we are going to calculate the internal rate of return IRR of this policy based on the benefit illustration given in the policy brochure. Because beyond the benefits and features, what we need to know before deciding to invest in this policy is the returns we get in our hands at the end of the day. That will help us make an informed decision. So for calculation purpose, let us assume that a male aged 30 years was going to purchase this policy for a sum assured of 10,28,016 rupees with a policy term of 24 years and a premium paying term of 12 years. So he's going to pay an annual premium of 1,03,000 rupees. So here he will receive an annual cash bonus from the beginning of the policy term and guaranteed monthly income after the end of the premium paying term. So how we are going to assume the future rate of investment return for these cash bonus and guaranteed monthly income is at 4% and 8%, and also this plan has a non-guaranteed bonus payable along with the maturity. So the assumed bonus rate will also be calculated at 4% and 8% per annum. These are not guaranteed returns, and they are just for example purposes to show you how this policy can perform in worst and best case scenario. So as you can see, the maturity proceeds are meager when you consider the time value of your investment money, considering the IRR and the maturity benefit, which you can see presented on the screen for your reference. So after 24 years, these proceeds will not help you to meet any of your financial goals, because the IRR calculated under the 4% scenario is at 2.62%. Under the 8% scenario, the IRR is at 5.80%. This rate is less than a savings bank account interest rate. Other fixed income instruments like even bank fixed deposit can fetch you better returns even after taxation. So considering all these things, this plan is not beneficial for an investor in the long run. So as we note that this policy is not going to give us the desirable outcome we need, what we are going to do is we are going to compare this policy returns with other market related instrument or other example using an alternative strategy returns just for a comparative analysis. So here what we are going to do is, in this alternative strategy, instead of investing in an insurance cum investment policy like the Bajaj policy, we are going to invest in insurance and investments separately. So for life cover purpose, we have taken up a pure term insurance policy which has a sum assured of 10 lakhs, policy term of 24 years and premium paying term of 10 years. So here the annual premium is 8,000 compared to the annual premium we paid to the Bajaj Allianz policy, which was 1 lakh 3 rupees. So here how much amount we can save? We can save 92,003 rupees. So what we are going to do is we are going to invest the remaining amount in investment vehicles that will align with our risk profile. So here we have taken up two investment vehicles based on a personal risk appetite, one for debt, one for equity, which is PPF and ELSS respectively. So as you can see, the PPF has a minimum subscription of 500 rupees for 15 years, but in the pure term policy, the premium paying term is only for 12 years. So to keep the investment going, we have adjusted and made some minimum contributions for the last 3 years of 500 rupees. So in the post lock-in period of PPF after 15 years, what we are going to do is the maturity proceeds are going to be invested in a 7% return instrument for the next 9 years to match the 24-year policy term as in the example. So the ELSS mutual fund has no lock-in or minimum investment concept. So in the first 10 years, the cash flow is going to be split between life cover premium and ELSS investment, and in the next 2 years, the whole amount is going to be invested in the ELSS fund. In the last 12 years, that ELSS fund will grow without any contribution. In this investment strategy, we have avoided annual withdrawals to showcase the power of compounding. So if you calculate the IRR for both these scenarios, you can see that the IRR for pure term insurance along with the debt instrument PPF yields you an IRR of 6.65%, while pure term insurance plus equity instrument ELSS fund yields you an IRR of 10.92%. So the thing is, PPF is eligible for tax deduction and maturity proceeds are tax free. ELSS mutual funds are also eligible for tax deduction, but the maturity proceeds are taxed. So we have considered only the post tax maturity amount and then calculated the IRR. So under ELSS, the pre-tax maturity amount is 97.62 lakhs. The post-tax maturity proceeds are 86.97 lakhs and the post-tax IRR is 10.92%. So even after paying tax, the ELSS fund option holds good. So this clearly shows us that the tax benefit you get from the life insurance is not worth the candle, as there are other investment products available in the market which can yield you a consistent inflation beating return for the long term. So if you have any doubts regarding how the ELSS tax is being calculated here, we do have a small tabular column presented on the screen for your reference, which you can pause and see. So then what is the final verdict? Is investing in the Bajaj Allianz Life Flexi Income Gold Plan worth it or not? This plan offers you flexibility in receiving your benefits, even if you receive your benefits in cash every year, but it will not be sufficient to meet any big ticket expenses. But why do insurance agents try to sell you this plan? There are a lot of policies in the bazaar that give high agent commission, and this is one of them. So even if you accumulate, it is not beneficial to you in any way, as the life cover is not adequate, and also the IRR is not beneficial for the investor in the long run. So don't park your savings in these insurance products for tax benefits alone.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.